Can I start with you, John? We are having a trade war between U.S. and China. Do you think that both sides, at a certain point of time, can reach a compromise, or do you think that it's going to get worse before it can get better?
Well, I certainly hope so. Trade war is not good for anybody. But I think where we are now, we have to look at the numbers. How much impact does that actually have on economies? And when you look at the numbers, we're talking about 10% tariffs on 250 billion in imports. That represents around 25 billion. If you compare that to the Chinese economy, which is 13 trillion, we're still talking small numbers in the context of things. But of course, what's more important is the escalation. Is it going to get worse? And that is the right question. And that depends on whether the US is looking in this to get a deal before the elections, or whether it's something more structural. They're worried about China's rise, and that they're trying to slow down China. And if that's the case, then we should expect more to come. But I think my response to that really is that China does have the ability to respond, not only by retaliating, but also to stimulate its economy a bit further, to support its economy. It's already done that through tax cuts. So I'd say that it doesn't necessarily need to get worse from here on, but that China does have the tools to respond.
Is this ramification will have a spillover effect on to other emerging countries or emerging economies?
Well, I think we've probably seen the worst in terms of Argentina, Turkey getting hit quite hard, but that's more to do with interest rates going up in the US and policy tightening. And I think in Asia it's a slightly different story in the sense that they haven't suffered from the credit growth, the strong credit growth that we saw in Turkey and Argentina, which led to their crises. In Asia it's been a lot more subtle. There's obviously consumer demand, which is quite strong, and China's less dependent on exports than it used to be. So I'd argue that Asia's not in such a bad place compared to some emerging markets.
You cover the Asian region, and as we all know, Asia is a diverse continent with many countries. Which are some of the countries that investors, from this side of the world, should be focusing on?
Yeah, well, from our perspective, it's always, it's about finding stocks that are undervalued. And obviously in this type of market, it's easier than it was 6 months ago. And it's also about offering clients a balanced portfolio. And that said, where are we finding opportunities? Well, at the moment, there are opportunities given the trade issues in car manufacturers, for example, or exporters. Valuations have come down. But I'd say that our portfolio is very much balanced between growth, the Chinese internet type stocks, which have also seen a bit of weakness recently, and other areas that are fundamentally cheap at the moment, like Korea. And I think in the portfolio, we've also added a bit of defensiveness. We've added to some stocks that have strong balance sheets, and there's an abundance of stocks in Asia that do have strong balance sheets, particularly in Taiwan, a lot of cash on the balance sheet.
When do you think that sentiment, will return, to the Asian markets?
Oh, well, that's difficult to say. That's the million-dollar question. I think if we find ourselves in a situation where the trade war does de-escalate, and we find ourselves in a situation where the US doesn't overheat, and therefore there's no need to increase interest rates much further, we might find ourselves in a situation where capital might find Asia attractive again.
Do you think this is a good entry point given the valuations?
I think valuations are now below averages. So we're talking about valuations that are more attractive at around 10.5 times earnings. The earnings growth actually for next year is above 10%, which is pretty decent. And on top of that, you've got a dividend of around 3%. So it's not too bad.
Turning to Kent, can you tell us about the story of China is now trying to move forward in terms of technology advancement, and also moving from the export-oriented economy to more consumption side of growth. Do you think that China will succeed, in this transition?
Yeah, absolutely. I think that what you're alluding to really is kind of the old China versus the new China with the internet companies and everything. And I think that's a brilliant example of how they've managed to do that. Transition from exports to more consumption-based. I think that's been an initiative from the government as well, kind of led by the government, and they're putting a lot of support into these new industries. But I think what's important to note is that it's not really just happening just within China, but it's happening all over in Asia as well, to go more from an export-driven to something with more value-add services.
Given the trade war with the U.S., I've heard some analysts saying that China will, in the future, become less dependent on the U.S. market. So they are trying to diversify or look for opportunities elsewhere. One of the answers is the Belt and Road initiatives. Do you think that the Belt and Road initiative will be an answer to this for China to further to continue to expand its market?
Right, I think you hit it right on the spot, right, in terms of diversification. So this Belt and Road initiative, it's a wide initiative that's been put in place into their strategic plan. And it really does span a lot of countries, and Thailand being one of them as well. But I think to take a step back, it's really good to understand exactly what they're trying to achieve with this Belt and Road initiative. And of course, people say about the in terms of the monetary value of being able to support these infrastructure in these countries, and also in the future be able to kind of help with more job creation within these countries as well. But I think ultimately it's really about the influence, right, and them trying to emerge within the global stage as a power.
Do you think that Asia in general will continue to post high growth rate and to become the gravity, of the global growth, going forward?
Yeah, I think. If we step back a bit and you look at where the growth has come from. We're talking about a region that is a third of global GDP. It's 2/3 of global GDP growth. Yet, when you look at people's portfolio, particularly in the West, they'll have less than 10% in Asia. And so there is definitely scope for that to move forward. And I think there's still catch-up potential in Asia. GDP per capita is still relatively low. Demographics in some countries is quite favorable. And so the drivers of growth are still there. And so I would expect Asia to continue to grow faster than the developed world and offering better opportunities.
Can you touch a little bit on the Indian market?
Yeah, absolutely. Sure. The Indian market, that's the most expensive market in Asia. And for good reason. It's got good profitability. Some companies are very good, well-managed companies. And I think we are finding opportunities there as well. So for selective investors, we don't need to own the market, which is expensive. We need to own specific stocks that we think are undervalued. And we find that in the banking sector, we find that in the consumer sector, in some mid-caps. And so we find that it's a good hunting ground for opportunities in India.
Going forward next year, what are some of the main themes or trends that we should be focusing on in terms of the overall Asian market?
So I guess maybe a couple of points with that. I think right now we're in a period of quite a lot of disruption. I think that's been really due to the technology, right? And I think that going forward, I think a lot of this disruption would actually cause there's going to be a lot of volatility in 2019. But with a lot of this volatility, a lot of times in the past, it's been the central banks who've kind of come in and stepped in with their monetary policies. So I think going forward, it's really how they're able to successfully kind of draw out that liquidity in a way that doesn't create too much disruption. So I think the best way, again, going back to diversification of your portfolio.
Yeah, I'd agree with that. For us, it's all about selecting 60 stocks basically in a universe of thousands of stocks, and clearly in any environment we can find opportunities. And in the environment we're in now, after a year of poor performance, valuations have come down to attractive levels, and I think that's something to feel more comfortable at, especially as an active manager. So we think we can deliver those returns over the next 3 years, which is the horizon that we're looking at, as long as we focus on buying stocks that are trading at undervalue relative to their fundamentals.
Can you also give us an idea about the potential of the ASEAN market?
Yeah. So the ASEAN market, absolutely. ASEAN market is a difficult one for us, for someone that is looking at the entire region. because it tends to trade on higher valuations. And so we need more conviction when we invest in a stock in some countries in ASEAN. But if you look at, for example, the Philippines, Indonesia, these are economies or markets that have been hit hard this year. The currencies have been hit, and obviously that's due to their current account deteriorating. But we don't think there's any structural issues there. It's just a question of risk aversion in the market. So from that perspective, we find opportunities. Thailand has been a lot more steady this year, and then obviously Malaysia, which is going through some political changes there. So there's a lot of exciting things happening, but I would say that the drop in markets in the Philippines
So I guess maybe from to add on to that point, from a short-term perspective, with all the trade war going on with the U.S. and China, I think sometimes people look at that as the ASEAN market is really, as a way to shift away from that as well, to diversify. But I think from a long-term perspective, as John mentioned, the demographics speak for themselves in terms of if you look at how many people within these ASEAN market, whether it be Philippines, Thailand, or Indonesia, and as their GDP per capita continues to grow, and you mentioned about domestic consumption as being one of the themes, I think in long-term perspective, definitely going to be doing very well.
One final question. Three main issues have been dominating the global markets this year. One is the trade war. Second is the rising U.S. interest rates. And now maybe rising oil prices. So next year, do you think that these three main issues will continue to hang on, or is it going to fade away?
Yeah, that's a very difficult question. And I guess we have moved in a different phase in terms of the cycle. So we moved from a phase where economic momentum was favorable, we had low interest rates, and inflation was hardly there to be seen. And we've moved from that to a situation where the US particularly has shown signs of the economy running faster than what was expected, and therefore inflationary pressures started to build up, and interest rates having to go up as a result. So and the oil price on top of that. So these are all factors that have been negative for emerging markets more generally. And so, if we do start to see the U.S. economy start to slow down as the fiscal impulse dissipates over time, then there's a chance that these issues are less of a headwind for Asia.
Thank you very much, John, again, for a very frankful discussion.
Thank you very much.